Hey everyone, welcome back to the Coin Bureau Clips Q&A. My name is Guy and here is Nick.
What's up guys, how you doing? Good morning.
Coin Bureau's co-founder and CEO, of course. Nick, good to see you again. How you doing?
Man, good. Welcome back to some Q&A. It's been some time. Yeah,
it's good to be back. I haven't done it for the last couple of weeks,
for the past 2 weeks. We've been flying. I flew solo and then it was Jess last week, so yeah.
Okay. Time to remind people who I am. So these are obviously questions that people have sent us on Instagram. So thank you to everyone who sent in questions. We get loads, so we can only select a few. But let's go with some of the ones from this week. So the first one is from Lakinoten. Recession still might ruin halving this year. What do we think?
Well, I think there's two questions here. One is, first of all, do we really think there's going to be a recession? I mean, I know we talked about this a few days ago, and according to most of the data, it doesn't seem like that, right? So we had 2 weeks ago, you had the US GDP numbers. They were surprised to the upside, 3.3% growth in Q4, and not just in the US, right? So the global growth numbers are pretty good as well. Like the IMF predicts that in this year, the US will have 2.1% growth, and globally there'll be about 3.1%. And then next year, we'll see about 1.7%. They forecast 1.7% growth in the US and 3.2% globally. So the question of whether we'll have a recession is not a foregone conclusion. Also, I mean, it's part of the reason why Jerome was, pretty hawkish on the inflation component for the FOMC 2 days ago, was because of the better growth outlook. So, obviously there's always tail risks in these kind of things. There's risk on geopolitical side, war in the Middle East, oil prices, geopolitics around China and Taiwan that could throw things out of kilter. But right now it seems like the numbers in terms of the economy are looking pretty good. So I don't know if we'll necessarily have the recession. And then there's the question around, let's assume for argument's sake there is a recession, a global recession of some description, a classical recession. Will this really have an impact on crypto? Will this really have an impact on Bitcoin? And I remember talking about this last week in the sense that last year, the correlation of Bitcoin to traditional asset classes, more specifically equity, which is considered a risk-on asset and moves, obviously will fall in a recession. It was the lowest it had been since the beginning of time, at 18% with the S&P. So what that shows is it doesn't necessarily, has it decoupled from equity, right? At least according to last year's data and the movements last year, it seems to have happened. And whether that will continue in the future, its past is never a predictor of future returns. And obviously the correlation is a moving variable. It's more than it's a question of whether it actually will play out, in the sense that if you do have a recession, will Bitcoin sell off, or will it prove like a risk hedge? Right? Yeah. Will it prove as some sort of a diversification from the financial system, from the general economy in that case, if we do have that recession? So it's not, I don't necessarily think it will be the case that you'll have crypto falling. And will it ruin the halving year? Well, not yet. I mean, I don't think so. But that's if we even have the recession. So I don't know, what do you think about that?
Well, I mean, I'm conscious that we're coming up to being a year on from the banking crisis in the US. So that's almost a year past, and Bitcoin performed really well during that crisis. Exactly. And that was pretty eye-opening, I think. And it does suggest, banking crises and recessions are very different beasts, but it does suggest to me that Bitcoin could hold up as a hedge asset in difficult times.
Yeah, exactly. Yeah, and I think that's the main question, right? And obviously there is the counter argument to this could be around, now you've got the ETFs, right? So would the fact that all traditional investors and asset managers have an option to invest in Bitcoin through an easy wrapper change the dynamics? I don't necessarily think so. I don't know if you've seen a lot of the commentary from large traditional financial investors, Larry Fink, all these people, Stan Druckenmiller, all these people coming into the crypto market through right now and around the ETF event have made the comments about it being a risk of a hedge against the traditional financial system, a hedge against current assets. And many investors are looking at it as a place to diversify away from there are other alternative investments which are risk off, like gold, etc. So, I mean, that's basically how I think it will play out. But I don't think we'll have a recession. I don't think it's in the pipes. And especially if the Fed does start to pivot around May's time, which most people are predicting, then that's going to be a boon for all asset classes in terms of liquidity.
Yeah.
So, yeah.
Liquidity, all important. I'm amazed we haven't had a recession in the US. I mean, I think Europe went into recession, didn't it?
Germany's still in a recession.
Germany is in all sorts
the
of trouble.
sick dog of Europe, yeah.
But it is kind of amazing, isn't it?
It is amazing. I mean, if you think back to just last year, the concept of having rates this high without something breaking in the economy, well, everyone thought we'd go into a recession. It's coming in. And there was that time when we did it, when there was that technically was a recession. Right?
Yeah, because it had like two consecutive quarters.
But although there was a lot of debate around that, because it's like, okay, the job markets are pretty strong still. It's like, it could just be a gremlin, and it's just a data thing. You shouldn't put too much stock into it.
It was a bit of a technicality,
a technical recession, but not a classical financial recession that we haven't had that. And then, of course, the COVID wasn't really either a recession because that was like, it was a man-made recession. It wasn't classical recession, right?
Yeah.
So it was just they shut down the economy.
Yeah. And of course, recession, the worst part of a recession is always, seeing people lose their jobs.
Yeah.
And, that didn't happen with the US job market has held up remarkably.
Yeah.
Crazy. Yeah. Okay, what's next?
Next question. So this is from Zed Sombi Fahar, and he's asking, what happens after this bull? Will we ever see bull runs like we used to or not?
Yeah, that's a good question. I think this is, I think one of the big features of this year and probably next year is going to be regulation. We've got regulations that have already been passed that will be coming into force. And I think we're going to see new regulations drawn up. And obviously the big market, if you like, to watch for that is going to be the United States. And I think they are moving, albeit very, very slowly, towards getting crypto regulated.
Yeah.
And I think, although that's going to have a lot of benefits, that is also going to, I think, bring the market to heel a little bit. I don't think we're going to see quite the sort of craziness that we've seen in the past. And in some ways, that's a good thing, because I think it will become harder to spin up some vaporware out of nothing, market the hell out of it, get people to ape in, and then just, walk off with a whole load of profits. But on the other hand, it's kind of not going to be as fun. I don't think, you're going to see the sort of opportunities for making, crazy returns. And perhaps in the long term, that's a good thing. But I guess it's all crypto is one way or another, whether it's through regulation or just, I guess, the free market in a way, I think is going to become more consolidated and more, I guess, responsible. Because I don't think we can sustain the sort of model that we've seen over the last few years of stuff coming out of nothing.
Wild West cowboy stuff.
Yeah, like insane valuations. I don't think that's sustainable. So one way or another, crypto will become more consolidated, more boring. And that, I guess, will be probably largely a good thing in that, people won't, there won't be such opportunities for losing money. Flip side is there won't be quite the same opportunities for making money either. There'll be less risk and less reward.
Yeah, that's a good point. So the regulation angle you think will tamp down the volatility. I think there's also the component here around thinking about what's crypto cycles in general, Bitcoin cycles, what drives the Bitcoin bull cycle. And that is the whole 4-year halving event, right? Yeah. Generally, that's viewed as a determinant of the market movements. And if you look at previous history, the halving has driven the bull markets, right? So the question, then we've talked about this quite a few times, is will the halving event itself be as consequential as we move further in time? And I think the answer to that is no, because obviously, as we go through these halving events, the inflation approaches zero, and as we approach 21 million, so does the block reward, right?
Yeah.
And therefore, if you're a proponent of the stock to flow model, the increase in the flow of Bitcoin is much less significant compared to the stock of Bitcoin. So the actual impact in terms of supply dynamics should peter out and eventually approach zero. So the halving event won't actually have that much of an impact on the markets on the Bitcoin markets in the future. So we may not see this likely 4-year cycle unless it's just sentiment around the event itself, but not necessarily the actual supply shock impact that people see. So that's the one thing to consider around the timing of these bull markets. It's not going to be as cyclical as it was or as predictable. And then, regulation, but also liquidity. So as more, if these, as you've seen what these ETFs are doing, is they're bringing a lot of liquidity into the markets. Bitcoin liquidity and the liquidity in the crypto markets now is massive, right? So that's obviously going to, as liquidity increases, that's going to bring down the volatility, and that's going to make the actual cycles themselves less pronounced. But there'll still be Bitcoin cycles. There'll still be, the horse markets will go through bull and bear markets. But yeah, we're not going to see the bull runs like we used to see in the past, at least for big Bitcoin, the big cryptocurrencies like Bitcoin, like Ethereum. Yeah.
And I guess if Bitcoin sort of cleaves ever closer to the digital gold narrative, which seems to be the direction it's heading, then that suggests it will become an asset that people generally hold. There'll become less speculation.
Yeah.
And I mean, I think we're seeing that already. I think we're seeing the percentage of long-term holders climb, month on month. And I mean, I guess that feeds into itself. That becomes a self-fulfilling prophecy in a way, doesn't it? Because the more people hold it, the less volatile it becomes.
Yeah, exactly. Yeah.
So, I think it seems to be that the sort of various signs point towards whether this will be the last, sort of truly big bull market. I mean, I think there is a good chance of that, given how much is happening in crypto at the moment. Given how much crypto seems to be moving towards TradFi in many ways, and I think the ETFs are a good example of that. I mean, this is a good time to be paying attention. Sorry to interrupt you folks, but I have to let you know about the Coin Bureau deals page. Now, my team and I have been able to pull together some of the best promos and discounts in the crypto space. We're talking trading fee discounts, thousands of dollars in bonus airdrops, amazing deals at top exchanges, reduced prices on hardware wallets, and much, much more besides. So just go to coinbureau.com/deals, also linked to below, and find the promo suited to you. Enjoy the rest of the video. Okay, Tatia.me asks, do you think Bitcoin has a potential to replace today's money?
Yeah, of course it does. I think that you need to understand and ask yourself before answering this, ask yourself, what is today's money, right? So, I mean, this is something you will have covered and you've done before in the beginning of the podcast, right? The history of money. And if you go back in time on the history of money, the predominance of the fiat money system, which we have today, is not really that old, like in 1971, right? So it's only been around for a limited period of time in the whole, timeline of money, which means, therefore, one can still view it as kind of experimental, right?
Yeah.
There is nothing backing fiat money apart from a promise, apart from supposedly the full might of the US economy and its military, right? That's not a certainty for the rest of time. And as people there's the potential of the way things change with geopolitics. Is the US going to remain the strongest economy in the world? Growth rates don't say that in the future. So what that means is that, the fiat money system that we feel today with trust in the US dollar, that's not guaranteed to remain in the future. And then the question comes back to, if there's not the US dollar, what sort of currency would suffice? Do we go back to gold? I mean, gold is universal. The gold standard did exist beforehand, and gold has been a money for a long period of time. But when you think about gold now, it's like it's still, have to transport it, you have to store it. Central banks may it can be seized. It has been seized if you've been storing your gold in particular vaults, etc.
Yeah.
So then there's the question of what other kind of assets would central banks and countries be willing to hold if the US dollar standard doesn't exist anymore. And there's been talk potentially of something like a digital gold. There is no reason that they would not necessarily want to hold Bitcoin. It is the only fully permissionless global currency out there, right?
Yeah.
That isn't tied to any other fiat currency or commodity. Whether it's going to be used within countries as a medium of exchange, that's less. I mean, obviously there's the question around how scalable is Bitcoin, but there's the Lightning Network and all this kind of stuff. So I think that the short answer to your question is 100%. It definitely can. It's just the question of, obviously, at what stage do we see moving away from the US dollar, standard, right? And then would countries be comfortable holding a digital currency? And I think they will. And there's been speculation that we will soon see a central bank using Bitcoin as a reserve.
Yeah. I think, because there's, I don't think Bitcoin would ever replace as fiat money necessarily. I think that's as a medium of exchange.
Yeah.
I think it had, there was talk of that maybe happening, and I don't think that's realistic now. But I think it could be something that's used that replaces gold in a way for sort of high value transactions. And I think, the prospect of it being used for international trade, say, I mean, this assumes that it's it's kind of tied into what we were talking about earlier, isn't it? If it becomes less volatile, then I think it will be, it could be a medium of exchange, but for sort of large amounts. I think if you're wanting to move a large amount of money, let's say billions of dollars worth, because gold is so impractical for that purpose. And I mean, yes, you can tokenize gold. There is, Tether's got tokenized gold, Paxos has got tokenized gold, and that kind of works in a way, but it doesn't remove that centralization thing. Paxos or Tether could shut off access to that, whereas Bitcoin is a method of transferring value entirely trustlessly.
Yeah.
And I think, as we see, I think I've talked about this before, but as we see the world become more polarized, we're already talking about a US sphere of influence and, if you like, a non-US sphere of influence. Maybe you could call it a Chinese sphere of influence, a BRICS sphere of influence, whatever you like. But it does seem to be polarizing like that. And I think, there's going to be less demand to use US dollars. And I mean, we're already seeing even countries that are within the US sphere of influence, like France and China, did a trade deal in yuan not so long ago. And I think that was a big moment. So I think it could become this sort of parallel system whereby, large amounts, big trades are done, between entities, whether that's between countries or between corporations or between very wealthy individuals. If you want to buy there's a big super yacht anchored out there in Dubai Harbour. If you want to do a super yacht transaction, maybe that would be a Bitcoin, a job for Bitcoin. But I think, Gresham's law that says, bad people will spend bad money before good money.
Yeah.
Which means I think there'll always be a case for, fiat or whatever replaces it. Because, fiat's only been around, 50 odd years. Yeah. And already, the US is 30 trillion in debt as a result. That's...
But in terms of so let's assume that hypothetically that fiat is like the US dollar is predominant and move into other currencies. Like, would there not be a case that people could say, well, this is still a fiat currency? Like, would they be comfortable using it, just a general, like you said that there could be a system where you could have Bitcoin for large transactions and you could just have fiat for the smaller. But isn't it a situation where if people know and most of the population becomes aware to the fact that fiat is nothing but a promise, do you think that there's not going to be a situation where there could be a reversion to some sort of a gold standard again where something is actually backed with some sort of a commodity or beyond just a promise? Because today's money is not just the US dollar. Today's money is all money.
Yeah.
So you don't think there's any sort of possibility in the future that fiat money itself could be completely replaced?
I mean, I think
not replaced per se, but in the sense that it's backed by something. Again, they go back to a gold standard. They go back to backing their currencies with something actually solid and having monetary value.
Well, yes. Although I think that raises the question of what do you do with all this debt? That's built up. It's not just the US. I mean, I think pretty much every country is in debt to some degree. And in order to switch to a system, because if you're going to have a hard money system, if you're going to have a commodity-backed money, you've kind of got to, I guess you've got to kind of write off that debt in a way. And there are two, it's not just, it's governments are in debt, and that's, the big problem, but corporations are in debt, big individuals, wealthy individuals are in debt. That is such a wholesale upending of the system. I mean, I think it's possible, but I think that would only come about in the event of, a collapse of the current system. And I think, that basically World War III or something similar.
Well, I mean, there's many people who think we're pretty close to that anyway.
Yeah, I mean, that's not something we want to see.
Put it this way, do you think the US dollar is going to become non-dominant without some sort of a massive geopolitical shift?
Well, yeah, I think probably we will need some sort of shift like that. But I think the future probably involves lots of different types of money. And I think there'll be hard monies like Bitcoin, and there'll be, soft monies like fiat currencies and stuff. And I think people will still play that game of, it's a bit of a game of musical chairs with fiat, isn't it? You just keep sort of passing it, and you hope that you're not holding the bag when the music stops.
Yeah. Yeah.
Anyhow, this feels like a conversation that could probably go on for quite a long time.
Let's move to the next question. Okay, cool. So this is from Emad Roklau, and he's asking, would BTC ETFs lead to price manipulation of BTC?
Okay. I think it's Wroclaw or something. If it's
Wroclaw.
I don't know. That's my best.
That's your best read of Polish?
That's my best read of Polish, yeah. As you can tell, I don't speak a word of Polish. Let us know in the comments. Is that right? Okay. Would Bitcoin ETFs lead to price manipulation of BTC? This has been something that's been sort of flagged up a few times, isn't it?
Yeah.
I mean, we are already in a state. This is something that I think about a lot. We are already at a stage where a huge amount of Bitcoin supply is concentrated among a very small handful of people and institutions. And I think the ETFs are only going to exacerbate that. And that, I don't think, is a good thing. We have seen over the last few months, we have seen the number, I think it's Bitcoin shrimps, which is 1 BTC, between 1 and 10 BTC, I think.
It's a pretty weird name for someone who's got a very little Bitcoin. Why don't they just call it flounder or something? Like, why a shrimp? It's like, can't you call it a fish of some description?
There is a scale, isn't there? I think it's crabs
first.
I'm
a shrimp. I'm a whale. Whales eat shrimp.
Well, yeah, they do. I think, isn't it Bitcoin crabs are below 1 BTC, and then I think it's shrimps next, and then I think it's, there's dolphins.
Shrimps have more Bitcoin than a crab.
I think so.
Why would it? But a shrimp's smaller than the crab. Does that make sense to you?
We better check. We better Google that.
It's not scientific enough. We need to know our facts on the animal analogies of Bitcoin holders.
So anyhow, but I think the proportion of people who hold between 1 and 10 BTC, that has been climbing, and that's a good thing. I think that's a trend I would love to see continue. The problem is, since Bitcoin's inception, despite the efforts of a heroic few, Bitcoin supply has become more and more concentrated. I mean, MicroStrategy and Michael Saylor, between them, hold fairly significant proportion of Bitcoin's overall supply. 1 million BTC are concentrated in Satoshi's Genesis wallet. And we now have that crazy situation whereby no one wants to see it move, because even if one BTC, one sat would go out of that wallet. Which is kind of worrying.
Massive guillotine over the neck of the crypto markets.
I think that's something that Bitcoin would recover from, but it would be a shock.
Do you think it would recover from it?
I think so.
One sat? We got to think about what that implies.
Yeah.
Think what that implies.
Well, I mean, basically, more like that supply hitting the market. That is a huge supply shock. But I think that Bitcoin's price would tank as a result. But I still think there would be enough. I guess the psychological thing would be Jamie Dimon at Davos, wasn't it?
Yeah.
He was saying, well, what if Satoshi comes back and Satoshi? What if Satoshi comes back and
I played a trick on you, I changed the supply. It's not 21 million. Click the button.
Yeah, I think that would have a huge psychological impact. But I think the demand for Bitcoin would still be there. I think, even if we saw the price plunge. Anyhow, we're getting a little off topic. Yeah. So would these Bitcoin ETFs lead to price manipulation? I'm not sure that they would, because I think these ETFs lead essentially to BTC being locked up. I don't think it's going to be very liquid. And are they? The ETFs can only sell that Bitcoin if they need, if their shares are getting sold. They have to have enough BTC to back the number of shares that have been issued. So I'm not sure BlackRock, say, could necessarily dump a whole load of BTC on the market on a whim. Is that fair to say?
Yeah, that is true, but I think in terms of potential price manipulation, there's many facets to it. I think that there were concerns around price manipulation around Bitcoin going into these ETF launches. And if you remember, this is one of the big things the SEC talked about, right? And part of the reason they didn't want to approve it was because of concerns around spot manipulation, which is kind of weird. They had the futures ETF prior to that, because futures was technically slightly easier to manipulate. But in order to assuage the fears of the SEC, these SSA, surveillance sharing agreements, there were a lot of these were entered into with the exchanges and with the coin exchanges as well as the ETF providers. And basically, they would get into these agreements where they would share information around any sort of suspicious price movements in the spot market that are being created in the Bitcoin spot market. And that would the SEC there was a lot of these in place with a lot of the ETF providers. And as a result, the SEC approved the ETFs. But another important point here is that if you know how the mechanics of these ETFs work, is that there was a talk around the in-kind and the in-cash redemption, right? So it's a lot easier in terms of like making arbitrage with pricing differences in terms of the actual Bitcoin spot and the ETF shares. It's a lot easier to do arbitrage trades and differences in that when you are using in-kind redemption as opposed to cash, right? Because let's assume the question around manipulation, like for instance, let's assume that the price of the Bitcoin underlying commodity is much cheaper than the NAV of the shares on the ETF, then you can basically make an arbitrage trade where you buy the spot, short sell the shares, then use the spot commodity to create new shares and cover your shorts. But if you're talking about in-cash redemption, it's a lot less capital efficient because you need the cash first to do that, to go and short sell the shares in the ETF provider. So essentially, the long and short of it is that the in-cash redemption, which is what the SEC wanted and which all the ETF providers have done, doesn't allow for any. It's much harder to do arbitrage trades, which is part of the reason around this potential manipulation around the spot market, lower price to try and get a gain on the ETF redemptions. So surveillance sharing agreements and the in-cash redemption have made it a lot harder for arbitrage traders and manipulators to make a gain on these redemption and issuance events. But there's still always the possibility of it, but it's very hard now. And because of the SSAs and all the liquidity and the market surveillance, I don't think it's that much of a concern right now, which is part of the reason why the SEC approved it. Yeah.
Tell me you used to work in TradFi without telling me you used to work in TradFi.
Yeah, racking the brains there, just thinking back to those days. Yeah.
Well, I mean, it's you learn a lot. You learn a lot working here.
But I mean, ETF roles in general. It's actually, but that's why I say the futures ETFs. Like the reason why they weren't as efficient was because it was very easy to try and manipulate prices in this futures market prior to the rolls, because you knew when these guys would be rolling the ETF futures. So that's why the futures were just a terrible instrument and why we to have spot products right now.
Yeah.
Okay, now we're on to the next question, and this is a very important question from Sotris Tokas. And he's asking, are you happier now, Guy?
Am I happier?
Have I been now? Are you happy, Guy?
Thank you for that concern about my welfare.
As opposed to when?
Yeah. Have I been coming across as particularly unhappy recently? Well, it's nice that people have this concern. Well, yes. I mean, I am happy. My mood kind of rises and falls with the crypto market because you come into work and you're like, is it good or bad?
Yeah, it's very much tied to the crypto market sometimes, right? Which is not necessarily the best advice, right? I mean, if you tie in your emotional state to the crypto markets, then if it's as volatile as the crypto markets, people would think you're a bit of a schizo. So it can make you quite a schizo.
People assume you you're a bit of a hair trigger temper at times. Yeah. No, it's an interesting question though, because it does. This working in this industry does sort of get to you psychologically, and I think that's one of the reasons why I always say when people ask me how I deal with working in this industry, I say I have to have a few hours in the day where I don't do crypto or be on the internet or anything like that. But short answer is I am happier now because crypto's in a better place and it's more fun and more pleasant to report on that. How about you, Nick? Are you happier now?
I am, yes, I am. But it also did give me a reason to pause and think. And I think that of course, you can't help yourself in terms of when markets are crazy and you massive gains and green candles. You can't but help it impacts your emotional state. But I think that the key to longevity in this market is to not attach your to basically have external interests and hobbies that aren't too much tied to the crypto market, so you can have perspective. Because it is tough to make it through those bear markets. And if you're constantly relying on the green candles, which is at the end of the day money, right? If you're constantly relying on that to give you happiness and joy, it's like a drug, right? And like most drugs, when it's not there, it's not going to be a fun time.
Yeah, you get withdrawal.
You get massive withdrawal. So yeah, longevity, the happiness hack, try and find cool hobbies and interests, and also hang out with the normies. I know, and spread the good word of crypto, but also, I think that it's important to just hear about other things that are going on in the world, not just crypto.
Yeah. Go out and touch grass.
Yeah, touch grass.
Okay, so next question from the wonderfully named Coinclusion. I like it. Yeah. I've heard that Bitcoin mining isn't profitable anymore. Is this true?
Yeah, I mean, to be honest, there wouldn't be a Bitcoin network if it wasn't profitable, right?
Yeah. I mean, mining is this is part of the genius of Bitcoin, isn't it? The incredible design that Bitcoin has. As mining gets more profitable and more miners join the network, the difficulty rises. So that you get to a point where it becomes uneconomic for some miners to be mining. Their costs are too high, the rewards are too low, whatever it is. So therefore, the weakest performing miners, if you like, drop off. Yeah. So the hash rate goes down, which means the difficulty goes down, which then incentivizes more miners to join again. So in theory, you've got this system that is kept in balance. Yeah. And I mean, the fact that Bitcoin miners manage to ride out things like energy crises, spiraling costs, Bitcoin's price going down, and keep doing it, I think is testament. And Bitcoin's hash rate has only been rising. Yeah. I mean, this is what blows my mind.
Coming to the market, yeah.
And this is one of the things why a lot of us, I think, were sort of thought that we hadn't seen the bottom of the bear market when we had, because we hadn't seen a collapse in hash rate, which we had seen before. And I think this is testament to just how resilient Bitcoin has become, and just how resilient the industry that surrounds Bitcoin has become. So yeah, I mean, there will always be miners who are getting squeezed out, but the result of that means that other miners will be able to come back in.
Yeah, naturally healing. That's the genius of the actual Bitcoin protocol.
Yeah,
and it's actually quite profitable right now. And okay, there's the question around what happens after the halving, right? Okay, because naturally that's all things equal, halving in the revenue, right? But I think I actually put out a post on the CBC research feed, which is the Coin Bureau Club's specific research feed, where I looked into basically looking at a report by CoinShares report, where they looked at the miners' profitability right now, right, going into this halving, and how well positioned they are. Their percentage cost per Bitcoin for the price of Bitcoin is much higher than it was in 2020.
Right.
In the 2020 halving, indebtedness is much lower as well. So debt servicing won't be that much of a concern. And then they've got massive Bitcoin and cash balances. So it seems most miners are actually well positioned to go into this halving, and they're quite profitable. And as you've seen, mining stocks have done incredibly well over the past few months. And the question then is, when we go towards the halving itself, if there is going to be a pricing rally, which some people think it will lead to in the months after that, then CoinShares assumes that there could be this, what they call mining gold rush, where if your revenue growth, i.e. the price of Bitcoin, is growing faster than your costs, it's a great place to be in. So yeah, I think it's still profitable, and it could become more profitable. So keep your eyes on the mining sector.
Certainly it's not profitable to try and mine Bitcoin yourself at home. That has not been the case for a very long time, I think.
But aren't you renting a mining machine somewhere?
Yeah. I'm renting an ASIC from TerraHash Solutions. I spoke to their CEO for an interview here on Clips a few months ago, and that is profitable.
Yeah, I mean, so it's still profitable per se, even if you're an individual miner. Okay, and it's probably not so much to use your own energy grid and stuff, and they've got efficiencies of scale and stuff like that, which is why it's profitable for you.
Yeah, but I mean, if you wanted to buy your own ASIC, which ASICs aren't cheap, and set up your own mining rig at home, I think you would struggle to make money from that. Yeah, unless you had a very cheap source of electricity.
Yeah.
I like the idea of living in a house by a stream, or river with a water wheel, and using that to power, some ASICs. That's a little bit of my sort of dream of the future.
Back in Toronto, I had a friend who basically his rent included electricity.
Oh, really?
So
was he running ASICs then?
He wasn't running ASICs. He was running GPUs, ETH mining.
Okay. Oh, right. Okay.
And the landlord could never figure out, yeah, man, it's just, it's the boiler isn't working properly. I've told you to fix it, man. It's not energy efficient. You need to get some green energy stuff in here. It's like,
wow.
Ever since you moved in, the spike in electricity, it just doesn't make sense.
Yeah. What's that computer do? Yeah. Oh, it's just a game.
It's just a game. I'm a gamer. I like to game. This is why I got so many GPUs. Don't mess with me, bro.
Yeah. The whole mining thing I find absolutely fascinating. I just think it's such an interesting topic. I wouldn't want to be a Bitcoin miner because I think it must be quite stressful.
Very stressful, yeah.
But, hats off to the guys who do it. It's great. And, obviously a crucial part, a vital part of the Bitcoin network. Without miners, no Bitcoin.
Yeah.
Okay, let's move on.
So this is from Tok Nezev, and he's asking, isn't ETH market cap of 300 billion just too big for any significant upside? Visa or JPM are less than 2x that.
Okay. Well, there's a couple of things to bear in mind here. Firstly, you're right in a way. The larger, it's not a crypto's price that determines how much it is going to see in terms of gains. It's market cap. So quite naturally, the gains that you will see from buying BTC or ETH, while I think there will be still significant gains over the coming months and years, you're not going to get the sort of 100x gains that you would get from a crypto with a much lower market cap. That's just a fact of life. I don't think it makes BTC or ETH necessarily bad investments, because I think there's those gains the gains that it will see are not guaranteed, but you've got a better chance of seeing gain. It's got less chance of going to zero. Yeah. Let's put it like that. So that's something to bear in mind. Yeah, you won't Bitcoin or Ethereum or indeed any other top five crypto, excluding stablecoins, of course, won't make you 100x gains, and stablecoins certainly won't. Sure. So that's part of the thing to consider. Yeah, market cap is important. I mean, it depends if you see Ethereum also as being analogous to JP Morgan or Visa. Yeah. I think Ethereum offers a lot more, than those companies. Visa is a payments network. That's basically what Visa does. It transfers value. Now that is an enormously valuable business, and Visa is obviously massive and recognized across the world. Yes, Ethereum and its layer 2s in time, I think, are going to become more of a payments network. I mean, you wouldn't use Ethereum to be a payments network now because of the gas costs.
Yeah.
But bear in mind, Denkun is going to lower gas costs, especially most notably for layer 2s. So we could see payments on layer 2s become a thing. Although I think I think other blockchains are sort of doing that more. Tron, for instance, is much more of a payments network than Ethereum. But Ethereum, there is so much more to it, isn't there? I mean, Ethereum is a network on which, you're going to be, there are any number of applications that you can use the Ethereum network for.
Yeah, I mean, I totally agree. I don't think it's necessarily analogous because Ethereum is trying, in terms of the vision of Ethereum, is a global decentralized supercomputer, right? Especially with many of the upgrades that are coming around in the roadmap to Ethereum, it really has the potential to be that. And it's not just a financial network, right? So you can't just view it like JP Morgan or Visa. And if you believe in the notion of the fat protocol theory, which is the value of the actual network itself can be way more valuable than all the apps built on top of it, there is no reason for ETH to just be viewed through the lens of a financial applications network. I think that it's not necessarily analogous. And I do agree with your point, of course. Higher market cap, but potential gains on Ethereum as a large market cap coin is much less than some of the coins below the top 10 or so. But also note that Ethereum's market cap is determined also by outstanding or circulating supply, right? Mm-hmm. And as one thing we do know about Ethereum, it does have, when it has a large amount of demand, is burn rates and that potential deflation, net protocol deflation, which therefore means that it's not necessarily analogous to the market cap itself or to the price gains you could see if you hold Ethereum, because if you have less of if the network faces deflation, right, then the circulating supply falls, and therefore the gains you could see is more than just the 2x or 3x, because it's not just the market cap dependent. So that's another point to consider when thinking about ETH's market cap or any coin that could become deflationary.
Yeah. Look, if you structure a portfolio that is balanced, this is why 70% of my personal portfolio, which we'll talk about portfolios in a minute, but I think you need a portfolio that is structured between so-called safer bets like BTC and ETH, and then that allows you to go and take longer, more risky punts on cryptos that could 100x. If you put everything on high risk, high reward, you might see some gains, but the risk side becomes way bigger, and you're kind of asking for trouble. But we'll talk about portfolio. I think that's going to be one of the later questions. Okay, Landis asks INJ. Okay. Do we say INJ or INJ?
It's INJ because it's ninjas. INJ.
INJ. All right. Good to get these things cleared up. INJ already did 30x this year. Stop reminding me. Keep hodling or take money and invest into something else. Now, I think this person is asking for financial advice. But Nick, you're a ninja.
Tell us. So, of course.
Give us non-financial advice.
Non-financial advice from a fellow ninja. So as you know, obviously, I hold Injective in my personal portfolio. And this is a good question because it's something I've been considering. It's around, you've seen such a massive rally in the price of this, of Injective and INJ, or INJ. Is it something you should consider taking some profit? And then I saw Mark Cuban said, he tweeted about Injective, and I was like, maybe not.
Maybe hold a little
longer. But no, in all seriousness, I think that, look, if you've held it over the past 3 to 4 months and you've made significant gains on it, I think it is wise to start taking a little bit of profit. A bird in the hand is worth 2 in the bush. But I still think there is potential for gains, right? I do think that, but I'm not 100% certain because, Mark, it's also dependent on the market, right?
Yeah.
From the tokenomics perspective, Injective's got a lot of value because it's got potentially goes to deflationary. You've got at least massive amounts of demand. 50 million Injective has been staked. There's 170,000 stakers. You have about nearly $2 million being burned in INJ a month. So this is obviously deflationary for the network, and there's exciting stuff being built on the network itself. Lots of protocols and dApps that also could potentially have airdrops, which lots of people are excited about. So what I'm considering is maybe I'll take a little bit of profit and then start staking in a lot of different protocols within the Injective ecosystem, because it is a really exciting project. And we've actually got scheduled with an interview with the CEO in the next 2 weeks or so. So if you guys have any questions you want us to ask, let me know in the comments, and we could ask him. But I think that it's an exciting ecosystem, but I think that definitely do take a little bit of profit. Don't be scared to take profit in general in this bull market if you've seen massive gains, because you can still you don't have to sell your entire stack. You can still you can participate in the ecosystem, and make additional airdrops is additional value potentially as well. Staking there's good staking rewards on Injective as well. So
I mean, look, if you've made 30x, you can sell off a portion of your portfolio. Not by no means the majority. Cover your initial investment. You haven't lost anything. Everyone's a winner.
Exactly.
I'm just, the only reason I'm annoyed at that question is because I slept on INJ and never got into it, and Nick did, and now I have to hear about it all the time.
But it's super impressive how they were able to get demand within, because I was speaking to the marketing chap the other day, and how they were able to create this interest and bring new dApps onto them post FTX, new dApps building from the Terra ecosystem, for instance. They reached out to them proactively. Also, some people from the Solana network, and they're looking a lot of it in the interoperability. They're trying to bring this Solana virtual machine, the Ethereum virtual machine, to make it a place where lots of developers would want to build. And of course, the IBC protocol allows them to expand out and provide liquidity to all the dApps within Cosmos. So there's a lot of stuff building on Injective, and I could go on forever, but
bullish on INJ, in other words.
But cool. So next question is from Jazzy7011, and in caps: your current portfolio status.
If it's in caps,
It's in caps, they want to know.
With no question mark.
With no question mark.
So
now,
it's just like,
they are demanding to know your current portfolio status, guy.
It's basically the equivalent of someone coming up to me on the street and yelling that statement directly into my face.
Where is it and why can't I see it in a newsletter anymore, guy?
Okay, well, all right, Jazzy, fine. If you put it like that. Okay, so I touched on this earlier. Current portfolio status: 40-odd% BTC, 30-odd% ETH, for reasons that I explained earlier. My next biggest holding after that is PITH, about 3.5% to 4%, probably nearer 4% now that PITH has gone up in price quite a lot over the last 24 hours. So that's my next biggest holding. After that, my next biggest holding is Solana. I got in PITH and Sol I bought relatively recently. We covered PITH in a video on Coin Bureau Club, and I really thought the potential of it is amazing. You know, a competitor to Chainlink, which has been much needed. I think Chainlink is a great project, but I think competition in that niche is called for. So that's why I went in on PITH. Sol, I've held Sol before. I think Solana's a great project, and the fact that it came through everything with FTX, I think is real testament to its enduring quality. I think it's here to stay, and I think there's still upside for Sol in the long term. And after that, my next biggest holding, I think, is Atom. Cosmos's Atom. And I've talked many times before that I think the Cosmos ecosystem is incredible. What I would say is that although I'm still a big fan of Cosmos and Atom, Atom has not seen much in the way of price action.
The tokenomics in Atom isn't amazing.
The tokenomics aren't great.
Yeah.
There have been proposals to fix Atom's tokenomics, and I think that is still a process that's ongoing. The Cosmos community is very much divided on the issue. I'm not convinced we're going to see huge upside for Atom in this bull market, unless those tokenomics are fixed. Cosmos's ecosystem, on the other hand,
projects in Cosmos,
yeah. I think although I'm not planning to sell my Atom because I've got it staked. I'm not sure we'll see the same sort of upside without those tokenomics fixed. So that's a sort of high-level overview of my portfolio. I hold a few other coins and tokens, including some in the Cosmos ecosystem. If you want to find out what it looks like in detail and what Nick's portfolio looks like, other than his massive INJ allocation and other Coin Bureau team members' portfolios, then you can join Coin Bureau Club, and all that information is available on the Coin Bureau Club site. You can see just how degenerate some of us are.
Yeah.
Not me. I play it very safe. Okay. Cool. Final question. We're back to no caps, which is great. Jazz Scott asks, what would you say to people who say if crypto equals freedom, why so many centralized regulations?
Yeah, that's a good one, right?
Interesting question, Nat. So centralized regulations is a bit of a...
centralized regulations is a funny term, but I get what he's trying to say in terms of like, if you think crypto is freedom and we're supposed to be outside of the traditional system, the cypherpunk manifesto kind of thing, why are we so reliant, and so why are we pushing for all these regulations, right? Why are we trying to kowtow to the regulators and trying to do lobbying and get positive regulations through? And I think it is true if you view it from a completely philosophical angle. It's like crypto was created to be independent of the financial system, independent of government regulations and rules. But the problem is like, although that is a good idealistic stance to take, it's not necessarily the way the world is, right? If you want crypto to have mass adoption, if you want it to interface with the traditional financial system in terms of being able to get fiat access through banking rails, if you want to be able to have ETFs, right, you need to have regulations that these massive institutional investors, regulators, and governments will feel comfortable with. So, it's like, crypto is freedom, but it's like you need to basically like you can't have your cake and eat it to a certain degree, right? You can't say, I want to have complete freedom, but then that implies that crypto would never be able to, no one could access it, all the banks would shut down working with any sort of crypto companies. And, let's assume the worst case scenario, government's just completely outlaw it because there's not been any sort of like interaction with the crypto industry and engagement. Then what are you going to do? People aren't going to go against the government and like hold crypto because they want to take an idealistic stance. Not everyone is as philosophical about the future of crypto as some really hardcore crypto cypherpunks are. So I think it's like you just have to play the game.
Yeah, I think also as well there's sort of various facets to crypto, because I think something like Bitcoin, which is truly decentralized, and however much they talk about shutting Bitcoin down, I don't think they're ever going to be able to do that. So if you hold Bitcoin, you are enhancing your own individual freedom to an extent. I don't think you can say that you're freeing yourself entirely from the fiat system, because the fiat system is very much aligned towards perpetuating itself, however rotten it may be. There are too many interested parties, namely governments and people in power. There are too many interested parties to let that system collapse easily. So, or to let an alternative grow too big. So I think Bitcoin does enhance your freedom, but it doesn't set you free entirely. And I think there's the other side of crypto as well. Like Chris Dixon from A16Z has been talking about this, because I think he's written a book on it. And this is the kind of Web3 aspect of it, in that crypto and blockchain technology can, I think, lead us towards an internet that is less centrally controlled. At the moment, the internet has sort of congealed around these huge companies. And I think I was listening to this guy, Chris Dixon, talking to Laura Shin, and I think it's a fantastic, and a huge percentage of value is captured by only a handful of companies, Meta and Google.
FANG, right?
Yeah, the FANG, they are capturing all this value, and there's very little left for everyone else. What crypto and blockchain and Web3 can do, if we let it, is to grow up a system that can distribute capital, that can distribute value, that can distribute ownership more freely. Yeah. And I think that is a form of freedom as well, because a centralized world that is controlled by a handful of corporations, a centralized internet, that is not a free internet. And I think if we have, as individuals, the opportunity to own part of the internet, to capture some of that value, to own a part of protocols that we use and believe in, that I think enhances freedom as well. But both individual freedom and I think financial freedom to an extent too. Yeah. So you're right in that regulations, and let's face it, there's a heck of a lot of centralization in crypto at the moment. That is not leading us towards a sort of promised land of freedom per se. But I think it can still, if it's done right and it evolves right, and regulations, I'm afraid, are a part of that, then individual freedom can be enhanced.
No, that's a good point, They're not incompatible necessarily.
Yeah. But they have to be done. They have to be done right. Yeah. Okay, that's it for today's Q&A. Thank you as ever for sending in questions. We'll be back soon. Maybe Jess and I will do it next week and mix it up a bit more.
Yeah, for sure. Yeah.
Okay. Cool. Thanks for watching, everyone. Don't forget to like and subscribe if you haven't already. Nick, thanks for joining.
Pleasure, man. Pleasure as always. See you guys soon.
See you guys soon.
Cheers.